Hi, this is Kim Watson. Welcome to a weekly outlook on Tuesday, the 19th of October. Sorry, it's a day late, but completely overran on it yesterday. So here we go. Where are we from a weekly perspective on the euro dollar? First, in fact, let's just have a quick look through this week's news events. There's not much there to be talking about, so it will be quick. Monday was a bank holiday yesterday. Columbus Day and Thanksgiving in Canada and so on. Today there's very little news out until 3:35. Following that, then we've got some speakers tomorrow, which I quite like it when there's speakers around, but the only problem with speakers is they can say some odd stuff and it can go on for a while. But anyway, 2 a.m. I don't think that's going to affect our day trading as such, but it may well create some volatility early hours in the morning there. Important thing on Wednesday here for UK time frame, we've got GDP and manufacturing production both out. Some monthly GDP figure now since July, and then the manufacturing production data coming out at the same time, which there could be a bit of a crossover because they're both out at the same time, but we'll see. Got MPC's Bank of England Monetary Policy Committee speaker due to speak at the Future of Work conference in UK. Be surprised if there's too much volatility around that particular meeting and that speech. Following on from that, US PPI in the afternoon at 1:30, maybe some volatility, and then late evening we've got FOMC speakers. Now FOMC speakers generally can create some volatility due to speaker economic outlook at the national corporate directors. So that would be more significant and may see some volatility come late evening. Reserve Bank of Australia Assistant Governor speaking then at 11:30, so again volatility potentially on the Aussie dollar there late evening for the UK time. After that, Thursday, Bank of England Credit Conditions Survey. Yep, that can create blips, but nothing significant. ECB Monetary Policy Meeting accounts due out at 12:30 on Thursday. We've seen more recently this can create some volatility because it's not what's not being said, although it's died down a little bit after Draghi's lie. I haven't forgiven for it, by the way, you may have noticed. Inflation CPI data coming out 1:30 on Thursday the 11th there. So US, that's key at the moment. They'll be still watching that, although it's pretty broadly expected that we will see an interest increase come December. Nothing expected before then. And finally, crude oil inventories will get a bit of a kicker. Friday, financial stability review 1:30. That could certainly give the Aussie dollar a kicker there through the Asian session. And then we've got consumer sentiment and another speaker. The speaker late on Friday evening, unlikely to do too much to what we're trading, but it's a quiet week in terms of news. So let's have a look at the technicals and we'll look at the sentiment on each of these accordingly. Starting off with the euro dollar, it's put in a pivot swing on the weekly basis there. It's probably just about triggered that. It is looking weak. There's the potential for it to slip off towards that 200. Doesn't look good for it at the moment at all, and well, the daily's consolidation around this phase here, it needs to do something. There's a bit of divergence across the lows. Needs to do something to get a kicker back up. As I said on the daily update this morning, on the morning outlook, it's pretty rangy. It could get back towards that weekly pivot that's above, and certainly a potential. We just need something a little bit more positive for the euro, but the Italian debt situation dragging things down at the moment. Looking at the sentiment for the euro at the moment, and it's starting to, you've seen these bigger positions coming in negative, building up here, which sentiment edging towards the negative side really. Sorry, I'm looking at the yen and not the euro at all. Let's start off looking at the yen. Euro would be much better. Still negative positions coming in. It's sliding off the positive. I wasn't far out, it was just looking at the wrong pair. I thought it looked a bit strange, but there you go. Negativity, as I say, kicking through there, positive side coming off. It's still 2 to 1 on the asset manager money. However, it's sliding a little bit there, changing maybe. So euro sentiment is more negative. The hedge funds have started looking like hedging a little bit more positive here, marginally, but still largely bearish. Okay, so sentiment pretty bearish and moving bearish. Pound, let's have a look at the pound. Well, last week we ended up with a nice hammer. It had put in a bearish pivot swing and followed through on that, just found some support round about out Charlie's lower band really. At the moment it's struggling off the back into that weekly 21 where we're sitting at the moment. Is there possible further upside from here? Well, all it really needs is a positive comment. We saw a negative comment coming out yesterday and it switched down quite quickly. There's still a risk of trading the pound at the moment in terms of the potential for it to trip the opposite direction at any stage. Now, I say the opposite direction, that's I'm referring to in terms of what position you're in. So if you're bullish, it could suddenly get a negative comment like we saw yesterday. If you're bearish, suddenly you get a positive comment through, and it can just whip out the price action can be quite savage around it. So it's something to bear in mind. Now I'm looking at this. Actually, I should really change this trend line on here if only I could. Be good. The trend line across here really sits across the lows here, but its price could be heading back south towards that. It would then have a bit of a head and shouldery type pattern kicking in there, which again would be bearish. It isn't looking the brightest at the moment for sure. Sentiment wise on the pound, well, negative positions, short positions are still key, and although being unwound a little bit by the looks of it on the hedge fund, the asset managers there, pension funds are coming off a little bit in terms of negative, but still 2 to 1, and again here both sides of the hedge funds taking money off both sides, so reducing, but their net short position, well, it's 58% short there, 64% short. Pretty neutralish stances, really, not really giving too much away there, because at the end of the day no one knows which way it's really going to go, but we do know that if anything positive really can give it a kicker, and we could see a sudden surge at some point given anything positive back towards those highs and maybe even towards the 200. At the moment though, it's looking like we could sit in the chop zone. Dollar yen, well, weekly point of view here, we're pulling back as we're seeing risk off again, and we're seeing money running into the yen as a consequence of that. Last week it ran back into those prior highs. It's been sitting around that level for some time, and it's just reacted to that as well. So a bit of a reaction late last week there, or mid last week. But it's at the moment finding a bit of support maybe off the daily 21. Still got the monthly pivot below, so a break of that would be seen as a target, but bigger targets from then. We're really looking then at the key moving averages if we see this risk off nature continue. As I said, there is support around that monthly pivot, and I'd be watching that for the long side. The sentiment I've already hinted at because we looked at that first, and short positions here increasing on it, so more negative positions there, and significantly more negative positions from the hedge fund. So all in agreement really, 2 to 1 on the pension funds, asset managers there. More than 2 to 1 sitting there across on the hedge fund. So a real bearish stance still sitting there, so we could see, as I said, further upside, just where from. Aussie dollar, well, once again, from a weekly perspective, we put in another weekly bearish pivot swing here. not quite where it may have triggered it a little bit, but certainly looking a bit iffy. However, there is also a divergence sort of sitting at this point. I mean, it's just a bit of a continuation pivot swing really, but we do see them at times, and it kicks off for some further continuation to the downside. It's still in this sort of accelerating path here, so maybe there's more downside to be had. To the upside and potential point of shorting is that weekly pivot and daily 8 moving average. So if it does pitch up to there at any point, that is a point of potential shorts. But it does look weak in terms of sentiment. Well, you can see how weak it is. Let's just check. I've got the Australian dollar here. There's not a lot of love for the Aussie dollar at the moment here. The sentiment is still pretty weak. At least 2 to 1 on hedge funds, and significantly more than that on the asset managers there. Okay, that's still looking weak. Weak and weak. Okay, so it's the Aussie dollar, Canadian dollar then finishing up with, almost, nearly, not quite. Weekly point of view, well, put in a sort of a relatively bullish candle there off its weekly 50, and but bigger picture still, I've left this old trend line on there. It should really come off, but in fact I could just be adjusting it to probably there. But what you're looking at here, lower highs generally, not all the time, but certainly been lower lows, and you just sort of look at this and think, well, it's quite a key point here to see if it does actually roll back over from where we're sitting here. It has run into that monthly pivot and pulled back yesterday. It's got the weekly pivot still below, which is a potential point of view point. If it does break up above this area, well, then I'd be looking towards that monthly R1, maybe even those prior highs there, somewhere in that sort of region, around about 31.79 as the week goes by. So that's that. Let's have a look at the sentiment of the Canadian dollar. Sentiment's looking okay, a bit more bullish. Some of the shorts being closed off here, and asset managers, pension funds, money, but leverage funds, well, still short, although not completely decisive, but still slightly less than 2 to 1 in terms of short positions being increased here. So over the week, so still edging, is conflict in terms of what we're seeing here. Bigger money is slower, looking at the long potential. We did see obviously the NAFTA treaty, it came in, can't call it that anymore, the treaty with the US anyway, that's come in and may help it a little bit more. Overall, as I say, mixed sentiment there. Finally, I would look at the New Zealand dollar here. Been talking about this for a while. I know some people have been trading it. I'm just going to come to the weekly picture. This is extremely negative sentiment on this, and well, it's still selling off pretty strongly. Last week it's just continued in that roll, and it's well, time to move this trend line a little bit here. Actually, there's no one that needs to just adjust, but potential here. It's a bit like the Aussie dollar in a sense. It's just not seeing any love at all. Maybe a pitch up to that weekly pivot would be a sell point back down again, and continuation of what we've been seeing. Certainly at the moment there's nothing to suggest any different here. As I said, I'll look at the sentiment there on the New Zealand dollar, and it's really this extreme situation that we're seeing here in total terms. It's the net positions that are effectively short is well, shown this a few times lately. It's an all-time, well, I say all-time since 2008 and a bit when this started. We're in a real extreme situation there, but it's weak, and week's weak, and that's what we're seeing at the moment. So that's the New Zealand dollar. Let's quick look at the S&Ps. Look at the futures here, and well, last week we're starting to see, and we could see a bit more of a correction here. Weekly wise, last week it sort of popped up higher than the previous week and then has put this bearish engulfing bar in on a bearish bar. Now, already seen a little bit more slippage this week, and it does to me look like, well, it didn't quite make a double top actually into last week there. It did pitch up though. Does look like it could be seeing a bit more of a correction. We've seen the 34 taken out now. The 50 has been tested a couple of times. There's a potential to see a bit more rollover here. This sort of action isn't unusual when we've seen so many when we start seeing interest tightening, to see that markets just start rolling a little bit. There's plenty of unrest out of there. The latest figures on the world trade data wasn't great, coming over through the Asian session. So all in all, this could have a little bit of knock-on effect, and we could see a bigger correction from here. Sentiment wise, on the S&Ps, let's have a look at what the futures are throwing up for us. Let's go right away over to here, E-minis, there we go. And this is where the big volumes are. And well, edge, some of the longer positions slowly coming off here. This is going to be slow to be unwound, these long positions here. But looking at the sentiment, well, ironically, it's a neutral ish move there with the amount of contracts added alongside and taken off on the short side. But well, saying that, it's a neutral-ish, so it's a positive swing there. So just noticing it's a equivalent of like a 30,000 contract move there. Okay, more positive, which may be it's time to it's the short side of things happening. It's just seemed to be wrong all year and for quite some time on the hedge fund side of things. Big money's been holding it up. That's now easing off a little bit. So my sentiment would be watch for it to edge off a little bit more potentially and maybe see a bigger correction. Okay, so nothing looking bullish there. Quick look at oil because I get asked for the world trade. Go for the Western Texas oil here, so it'll be different in terms of price from Brent, but still edging up. It did put that sort of on a weekly point of view. We did make some new highs, but that sold off during the week. So we sit here at the moment. It's starting to look bearish, bullish again, rather. Big pardon. As we're sitting here, if this was to close anything like this, well, you would expect it to follow through and maybe see those highs tested again this week. So at the moment, looking bullish. Nothing to really shake that off when you look at the high lows, high highs through this market. Yes, it's got a monthly pivot underneath. If it was to sell off strongly, well, there's the target. But until for now, at least, it still looks bullish. Okay, that's pretty much it for me. I wish you all a great week, and I'll be back next week on this. Bye for now.